The subject that we're going to tackle today is the wealth tax situation on buying property in Spain and also the state solidarity tax. And today I'm very grateful and very happy to have our colleague Miriem Diori from MDG Advisors here in Malaga. We've interviewed Miriem before and we'll put the link into this video so you can actually see an in-depth video of Miriem. Hi Miriem, how are you?
Very well. My pleasure to be here with you.
No worries, and thank you for coming in. I know this is we've had a good conversation beforehand, so we're hopefully gonna get into deep, and hopefully we'll be able to shed some light on the complexities and what structures and things that we can do as advisors to help people invest in Spanish properties at a certain level, the high net worth. So firstly, Miriem, just give us a very brief background about yourself, your business, and what type of clients that you help.
I'm the partner director of MDG Advisors. We are a tax and accounting firm with 15 years of experience in the market. We basically work for international investors coming into Malaga and Costa del Sol. We are a team of 22 professionals. We collaborate with you and with many professionals in the area, so I'm very happy to be here.
What's your speciality?
So we mainly work for either companies or high net worth individuals. We work with 32 nationalities and 95% of our clients are international. So our team is very specialized on advising international clients.
Your background is obviously your English is excellent, and your whole team's English is excellent as well. So you can deal with complex foreign investors who...
Absolutely,
yeah.
Absolutely. As we say, we always try to do a bit more, and all our professionals specialize in international operations, from complex VAT operations, the study of double tax treaty, and all these Spanish tax regulations that have an impact on international clients, such as solidarity tax, for instance, what we're gonna discuss today.
Give us some background on the wealth tax and its history, please.
I mean, if we go back to what wealth tax is and solidarity tax, wealth tax is basically a tax on the assets someone has. It was instaured in Spain in 1977, abolished in 2008, and restated in 2011. When the new party from the right side, came into power in Andalusia, they applied a tax rebate of 100%. Okay. So, in fact, in practice, there is no wealth tax in Andalusia. When this happened, the national government instaured a new tax regulation called solidarity tax, Impuesto de las Grandes Fortunas. This new tax regulation applies basically to high net worth individuals because it applies in the exceed of 3.7 million.
The wealth tax doesn't really exist in Andalusia. It exists, but
it's
rebated. Yeah. Therefore, the central government brought in their own national tax to counteract that, and it applies on assets, and we'll go into that in a minute, of 3.7 million and above.
That's correct.
Anything below that is
not taxed.
Okay, fine.
And that's especially important for non-residents as well, basically buying high-end properties. Clients should be very well aware of what they're doing, because we have had the case of a client buying a property in La Zagaleta for 17 million and ending up paying 500,000 per year just in solidarity tax.
So €500,000 per year is going in wealth tax, solidarity tax.
Yes.
And he didn't know that?
Yeah. I mean, if
was that a shock to him or
Normally they know, because these kind of high-end clients come with the proper advice, but we found situations where they were not aware, as shocking as it can sound. So it's something that really, really is important to look at in advance.
Paying €500,000 a year in tax when you necessarily may or may not have to do that, I guess is something that...
And paying a tax that is not based on what you generate, not on your incomes, just on what you have, that makes you poorer and poorer every year, even if you are in that level.
Yeah. All right. So so this is quite an important subject, and the reason why I really wanted to, because on a daily basis we speak to a lot of clients, and you know, whether on, and a lot of the clients that we speak to are looking at 3-4 million and above. So the wealth tax, solidarity tax, is something, and the general findings that we have is not many people really know anything about it, and not many real estate agents talk about it. And some of the lawyers we ask certain questions, and when we get the answers, it's pretty obvious that they haven't had a chat about wealth tax.
Yeah.
And this is why I wanted to do this video, because I feel that people need to start talking about it.
Thank you very much
and
for doing it.
A, it exists. B, it can be quite punitive, and hopefully later on in this, we'll start talking about strategies.
I also think it's essential to have more information about this matter. And as you said, even lawyers are not aware of this oftenly.
They're not, I know, because again, I know that with I ask certain questions of clients and I don't get the right responses. And then I think, oh dear, we've got a bit of a problem here. That needs to be addressed. Right, so what kind of assets are we looking at really? Is it just real estate or is there other
It's
stuff?
not, it's really, I mean, if we're talking about a tax resident in Spain, it's basically everything you have worldwide. If we're talking about non-residents, it's for all the assets you have in Spain. Real estate property, portfolios, bank accounts, shares, not only houses.
So as an example, I've got a house worth 3 million. I bought it last year, but I've also got €1 million sat in my bank account. That takes me up to 4 million.
Up and makes you pay solidarity tax.
It won't be much, but I'll be in that bracket where I'll start paying solidarity tax. Okay, fine. So any assets that you have for non-residents, and we're talking about
in
residents, is fine. Okay, cool. Now let's talk about, okay, so we know what it is. What kind of planning do you do? What kind of things do you advise on to explain to clients in ways in which they can mitigate?
Yes. As a firm, we always try to take the simplest path for clients. In general, the simpler the better. Back in the day, it was very typical to set up structures, to, organize complex holdings or companies for what really is a holiday home. It's true that in this area, the value of the properties is really high, but there is still holiday homes. So we can find the formula to have the house and not paying high taxes. That will be always the best. So if we're looking about solidarity tax, for instance, in general, our straightforward recommendations is you buy it half and half with you and your wife, you split the total value, and normally you could be under the limits to pay solidarity tax, which is 3.7 per individual.
Per individual?
Per individual.
Okay, so that's interesting. So if you buy with your partner, your wife or husband, so in theory you get double.
Yeah.
Okay.
That's correct. So only when we are buying or studying really high-end properties, is when we really need to look carefully at solidarity tax. In the case of, for instance, a 10 million property, between a couple would be 5 and 5. So that's the situation where we need to think a bit smarter to prevent.
Let's use the 10 million then. Husband and wife. I've got one similar, but not quite 10 million, but they're looking at a little bit less than that. So what you're saying, they're from Switzerland, they're 58 years old. Husband has 3.7, wife has 3.7. So they are exempt up to 7.4 million.
That's correct.
They would have to pay solidarity tax
for the rest.
For the rest.
Yeah.
Okay, great. And I know you can't be specific, but what kind of, I mean, you've done calculations.
Yes, the tax rate in solidarity tax goes in different stages, and it goes from 0 to 3.5% per year.
Fine. So roughly for this couple, what would they be looking at? I mean, just...
yes, it would be 1.3 each, right? They could be looking at 1.8%, let's say 2%, 25,000 each. I'm just, speaking my mind.
You're being a bit prudent there as well, probably. It's probably maybe a little bit more than that, but say 25,000 each. So 50,000 per family in total. Okay, all right. So would putting it in a company structure help? If they wanted to buy it with their own money, put it in a company structure, how would that work?
I mean, that's a bit of very generalistic questions, because there are many factors that could make us recommend to set up a company or not, whether if it is their tax residency that could be attracted when you have high-end properties in other countries. I mean, there are many factors, but in general, following our mindset of keeps things simple, probably I would recommend to maintain the property under their personal names if the destination of the property is just for their personal use.
Holiday home, family use and stuff.
Because some people do a mix. They use the property, but they also rent it out. And in that cases, sometimes we recommend to set up a company. In general, if you just want to have a holiday home and keeps things simple, taking some finance could help.
Yeah, so I wanted to get into this point. So this is the whole point with that, you know. So one of the things that can be done, correct me if I'm wrong, but you can mitigate the amount that you actually own, the part that you own, by getting a physical mortgage against the asset.
That's correct.
So for example, if you bought for 10 million, you get a 50% mortgage at 5 million, that would reduce your actual stake within the asset.
That's correct.
Below.
We're always talking to net values. And the net value of the property you hold in Spain is value of the property less the mortgage it has. So of course, it's a tool a lot of clients are using to prevent the payment of solidarity tax.
This is quite interesting, because you're saying a married couple will both have 3.7 each. So you add the two together. So in order to mitigate, you don't really need a high mortgage loan to value. You could probably get away with something like a 30% or 35%, because
they're really in the limit.
So you don't have to burden yourself with credit, with mortgage credit, with the payments every month.
Yeah, you know what the situation we are seeing these days, that really high-end individuals, probably this couple, of course they're high-end, but still they're a couple, they can split the total assets they have in Spain. But if we are looking at higher levels, let's say a 20 million villa, just one owner, will end up being higher than the interest they're gonna pay.
Exactly.
So sometimes it is more efficient financially to get a mortgage than to really paying the taxes.
Are you listening, guys? This is really important. Right? This is where we need to be at. And I just want to add, interest rates in Spain through Spanish banks are the lowest they are
That's correct.
in Europe.
That's correct.
You know, we're looking at a loan of anything above 2 million. You should be, if you're that kind of profile client, you're going to be paying no more than 2.5 to 2.7 or 3%, como mucho. Like,
No, absolutely. So for them, especially for these international investors, it is cheaper to get finance than to pay cash.
but this is really important. So a lot of these high net worth individuals will have business interests that have stock portfolios that are giving them returns on their cash or their investments. And quite often I have conversations, well, I'm getting 10, 11% on my investments. And they say, especially clients from America, they say, what rate am I getting? What rate can you get me? Well, you can get me below 3%. Well, I'm not going to take my money out of my stock portfolio. Get me the mortgage. And if we can get them the mortgage to leverage and also help mitigate with
it's just about
tax situation.
It's just about making your numbers, truly.
This video isn't about, is tax good or is tax bad? But
of course.
What I find is that if you structure it right, you get the right advice, you don't have any surprises, it may make the difference of a good quality property investment in Spain to a bad one.
100%. I mean, always under the limits of the law, there are different options you can take. And obviously, we are here to get the best for our clients. So certainly, there are certain choices that can be done. As we were previously discussing, nowadays we see more and more sophisticated clients. They've got access to a lot of information. They are younger and they are very aware of what they can do. So it's the client who comes to us and propose different options. It challenges you to continue providing the best advice.
So if a client was come to you and you didn't have all this knowledge and these ideas on how to structure, how to leverage, and contacts like us who can put you into banks that can cope with that kind of lending. If you're an investor and you like Spain and you want to buy a holiday home for quite a substantial amount of money, but your tax advisor or your lawyer says, well, you're actually going to have to pay €500,000 in tax every year, that will probably put you off. You probably go somewhere else, right?
Of course, absolutely. And we tax advisors, we complain a lot when the government put in place this tax, because solidarity tax is truly wealth tax. It's something the general government put into force to fight the rebate done by the right parties in the different communities of Spain, such as Madrid or Andalusia in this case. So wealth tax is a very old-fashioned tax that hardly exists in Europe. Just in Norway, we have something similar. So, accepting that you need to pay taxes just for holding an asset is something that is not logic. I mean, I can understand that we all need to pay taxes for what we generate. But a tax that is based on what you have, it's more a moral debate, obviously, but it makes you poorer and poorer each year.
Mm-hmm.
So if we can fight it, we will.
Yeah, we're not here to discuss the benefits or the pros and cons of wealth tax or solidarity tax, but what we're here to do, I think, is to educate people. And if we've got someone that's sitting on the fence and worried about investing such a large amount of money into this country, into this region, Andalusia, they should contact us so that we can explain that it doesn't have to be so scary and that there are ways in which we can...
100%. My advice is always seek for the proper professional advice, whether if it is legal, taxes, finance, in advance.
Well in advance.
Well in advance. Before you make any decision, because planning in advance is something easy. We can do it. Amending what has been done, it can be very, very expensive. We can do it.
And sometimes impossible. With a mortgage,
absolutely,
without being able to plan the mortgage application, sometimes it's impossible. You sometimes
100%.
Just can't create the mortgage to fit.
Absolutely.
So we always encourage people to do agreement in principles, but
of course,
especially on
and in terms of mortgages, for instance, it's very important to know exactly what kind of finance you're getting. Because if you are a non-resident and you get a personal loan and you have a property with no mortgage, that will make you pay solidarity tax.
So you think you're getting like a loan against the asset, but you're not.
Exactly.
So that's just been a complete waste of time.
You need to read the small letters. I don't know if you have that expression
Small
in English.
Print, yeah.
Small print. And make sure you're getting the proper mortgage to prevent you from paying solidarity tax. So it's always important to seek for proper advice and for the right professionals.
Get informed, otherwise it can be very, very expensive.
100%. And listen, these kind of high-end investors, we're working with them every day. They're buying an important house, but they're really coming here a month, hardly, per year. So when they're thinking about, am I going to be paying 500,000 euros to enjoy 1 month in this property? I mean, I will go to Marbella Club or I will go to a 5-star hotel and will cost me less.
Yeah. Yeah, and just so I'm clear, so if you pay wealth tax, you don't have to pay solidarity tax on top?
That's correct. I mean, there is the same limit. And in fact, the government put into force this tax regulation to try to harmonize the taxes in all the country.
Okay, well, look, Miriem, I think we covered the topic of the wealth tax situation in Spain and solidarity tax in Spain adequately enough. I really hope so. If we haven't, obviously let us know if we've missed something and we can do that again. Thank you very much for coming in and explaining that very complex topic to us. And I think it's been extremely useful.
Thank you very much for having me. It was my pleasure.
It was brilliant. Thank you very much. And I'll see you again soon.